Hello, this is question number 49 of the Murray Group Insurance Services 100 Insurance Questions Answered in 100 Days video series. Today's question is, what is considered a pre-existing condition on a health insurance policy? And very simply put, a pre-existing condition is any health condition that you have leading into that health policy. Pre-existing conditions only become a concern when you go from not having any insurance to buying an insurance policy. If you're going from one policy to another, pre-existing conditions, at least in New York State, are not going to be a problem for you. That carrier, as long as you can prove that you had health insurance leading up to changing carriers, is going to continue to cover any issues that you have that were pre-existing the new policy. However, when you go from not having any insurance to having insurance, certain carriers are going to have different waiting periods. In most cases, it's 6 months. So they're going to make you wait 6 months before they'll provide benefit for that pre-existing condition. But also, you can buy back pre-existing condition coverage on many policies, and it looks like in 2014, that 6-month waiting period for pre-existing conditions is going to be completely done away with if Obamacare goes through. So what you really need to consider is if you go from not having any insurance to having insurance, there could possibly be a 6-month waiting period on any pre-existing conditions, but in most cases it is possible to buy back that 6-month period so you have coverage right away. But that's something you want to talk to your health insurance provider about. Like the Murray Group, we sell health insurance here. This is question number 49 of the Murray Group Insurance Services 100 Insurance Questions Answered in 100 Days video series. Thank you and have a great day.
Individuals. Most companies or organizations that you work for will provide some sort of group health coverage for you as an individual. Now, the way that these group plans work is they take everyone together, they pool it so that everyone is receiving similar benefits. They're able to reduce costs this way, and they're able to speed up the process of underwriting and getting people approved for these. Now, an important thing to remember is that the employer does receive a tax deductible for you participating in the plan, so it does benefit them to have you participate in the plan. Also, there is a required participation rate. Typically about 75% of the employees do need to participate in the plan for it to be considered an eligible group plan. Now, your employer may offer you options in terms of HMOs or PPOs, so it's important to understand the differences between those and to understand exactly what it is that you are being offered by your individual employer. The benefit plan that they may provide you may not make the most sense for you, but if you were to try to seek out a comparable plan such as that, it would potentially be quite a bit more expensive on your own. So an important thing to remember is, number one, you're getting good discounts when you get group plans through your employers because they're able to offer them at a discounted rate. But also, number two, remember that these benefits are not tailored to your specific needs, so they may not provide you with the flexibility and coverage that you personally would be ideal for you. So this has been John Pinelli talking to you today about group health insurance for individuals.